For the Federal Reserve, real conversation about what is going on with the balance sheet, David. Would love your insight, just your take, your opinion. Is that QE or is that not QE? What is that?
So the monetary policy that's been around and has been in place for a long time obviously has been an enormous stimulus. When we sit here today and I kind of think about, the path forward, I think we're now in a period this year after three mid-cycle cuts, for lack of a better term, that I don't expect a lot from the Fed in the context of this year. Obviously, the balance sheet's come down a lot over the course of the last couple of years. All of this supports or impacts liquidity in markets. And I think the Fed has done a reasonable job managing liquidity in markets, even with a speed bump back.
So I'll ask it again then. Is that QE as they start to buy T-bills and the balance sheet starts to expand again?
Anytime the Fed uses its resources to affect liquidity in some way, shape, or form, it's having an impact on markets. I'm not going to answer the question the way you're looking for me to answer it, because I don't think it's a black and white answer. You tell me what QE is.
No. We'll ask Jan Hatzius, we'll ask Bill Dudley, but the answer here is we get a lot of different opinions, including the former member of Goldman Sachs, really someone that drove your economics forward, Mr. Dudley of the New York Fed. We get all these different opinions, and what our audience wants to know is what you have learned from your pros on the desk of those reactions, the movements that you've seen in the short-term paper market. What have you actually observed in the market that gives you information about these balance sheet challenges?
Well, I think that everyone observed that the Fed had a very, very significant balance sheet investment and it reduced that balance sheet. There have been a bunch of regulatory inputs to the amount of liquidity that banks need to hold as the regulations have changed. And at some point, you can reach a supply-demand where, for a variety of reasons, some of them can be idiosyncratic around a moment in time, maybe tax payments, that the supply-demand of liquidity changes and the price for short-term liquidity rises. And we saw that. The Fed responded appropriately by saying we want to make sure that there's enough liquidity in the system. And I think all the banks also, I know we did, I can't speak for others, we positioned ourselves so at the end of the year, when we thought liquidity might be tight, we have liquidity to contribute to that.
Delicate question. Are you constrained by the new set of regulations? Are you happy with them, or do you need to see amendments so you do finance better?
No, we are an adapter to the regulatory framework. And so I think as an organization, we've adapted very well over the decade to the regulatory framework. And look, the regulatory framework continues to evolve. And so our job is to make sure we can serve our clients well, that we have the right resources, and we do not feel constrained to serve our clients well and run our business based on the regulatory framework.
We want your take on the markets and the price action we've seen over the last couple of months. The community, the investment community at the World Economic Forum, pretty polarised on what we're seeing at the moment. We've had a whole range of views. We had Guggenheim Scott Minerd say that it resembles some of the Ponzi scheme. We had Bob Prince of Bridgewater say that the boom-bust cycle as we know it is over. Where do you come down on those two extreme views?
Generally not a man of extremes. So I'd say that there will be booms and busts again at some point, although I don't see one anytime soon. And, as I've been around talking to clients over the last few days, and that's one of the principal things I do while I'm here, I'd say I see and I hear what I'd call kind of a confident, middle-of-the-road view of the current economic environment. U.S. economy is in good shape. Manufacturing sector is a little bit soft. Capital spending has been lower than people would like to see, but the consumer is overcompensating for that. Europe, a little bit better. Headwinds of the phase one deal helps a little, but in the distribution of outcomes, overwhelming likely scenario is economy chugs along this year.
Well said, but the distributions of outcome, and I remember this from Mr. Varnier in August of 2007, you get a 3 standard or even 4.1 standard deviation moment. Is Goldman Sachs, and for that matter, your view of global Wall Street, positioned better now, boom, bust, if we get that jump condition, that abrupt movement as we saw in August of 2007?
The banking system's positioned incredibly differently than it was positioned in 2007. There's been an enormous amount of leverage that's come out of the banking system. There's been a huge amount of equity that's gone into the banking system. I also think the risk management activities of the industry have improved materially. So there will be cycles, there will be events that stir markets. Generally, they repeat differently. So the last time there was a significant economic recession, it affected the banks significantly. I think the banks are in a different position. And when we do have trouble in the years ahead, which at some point we will, there are a range of things we can see, but I think the banks will be more resilient in the context of that based on the way they're currently capitalized.
Let's talk about how you're positioning the bank for the years to come.
Sure.
Investor Day. I believe it's next Wednesday.
Investor Day is next Wednesday.
Give us the teaser.
No, Investor Day is right now. Let's begin.
What are we looking
we can
for
begin
next
right now,
Wednesday?
but
Come on.
Investor Day is next Wednesday. It's our first Investor Day ever since we went public in 20 years. I'm a big believer that our investors and more broadly our stakeholders, deserve transparency around the way we're going to grow the organization, expand our franchise, serve our clients, and ultimately deliver higher returns for our shareholders. And so we'll lay out a series of initiatives, many of which we've spoken about, individually publicly, but with more information, we'll put out some targets with respect to returns that we can be held accountable to.
What targets?
We're going to put out targets with respect to returns that we can be held accountable to. And we'll talk a little bit about how we intend to run the bank so we can deliver for shareholders over time.
Let me set up a scenario. Let's say a week before your investor meeting, a competitor comes out and says our new profitability target is 15 to 70% return on equity. Does that make life a little bit difficult for you next week?
We're focused on running our business.
Of course.
I don't think that anyone came out and said 15 to 70% return on equity. They said 15 to 70% return on tangible equity.
Okay.
But we're focused on our business. And so our returns and our messages are going to be rooted in what we want to do as an organization.
You don't think you'll be benchmarked against the competition?
Everybody's always benchmarked against competition.
That's why I asked the question.
We're going to deliver what we think we can deliver over time for our shareholders to build a better, bigger, stronger organization.
Part of the sell side grilling you on this investor day, and you've got a whole team on this, and you've been very experienced as this, is they're going to talk about strategic vision. And so much of this on Investor Day is explaining to investors, do you want to expand through acquisition of a bank or just small bolt-on acquisitions that advance Goldman Sachs' intellect and technology? What's your feeling on that right now, given the terrific equity markets of the last 12 months? Are you priced out of opportunities globally?
Well, I've said this repeatedly that I think, and I come to this from my own experience as a banker, I think any leadership team that's running a big organization always has to be aware of both organic opportunities to grow and also inorganic opportunities to grow. We're always looking and thinking about things that we think can expand our franchise and allow us to serve our clients more effectively and ultimately deliver for shareholders. But the bar for us to ever do something significant and organically is extremely high.
But on a strategic basis, is that a geographic choice? Obviously, it's a financial choice. But tell me about the Goldman Sachs geography right now. Is it a Europe vision?
Goldman Sachs is a global firm. I think one of our competitive advantages is we truly are a global platform in the businesses that we operate in. Historically, if you look at our investment banking business, if you look at our sales and trading business, you look at our asset management business, we are a global organization and we have an ability to operate anywhere in the world.
David, what's the strategy on wealth management right now? On Goldman Sachs Asset Management, what's the strategy right now?
So on wealth management or on asset management?
I'll take both, please.
Well, you asked one and then the other.
It's like Jeopardy. I'll take, for two.
Let's start with asset management.
Please.
On asset management, we run one of the top 3 global active asset management platforms. It's an advisory-led business. In other words, we think our clients come to us because in addition to strong investment performance over a period of time, we package it around advice to help them meet their long-term investment needs. We think advice is differentiated and you can still get paid for advice. And that's what our asset management business focuses on. We're also very unique in that when you look at the 3 largest global asset management businesses, we may be the only one that really in every product category, including alternatives, is really at scale. And so, across liquidity products, across active equity and fixed income, across alternatives, we're at scale on a global basis. And I think for our institutional customers, that's an advantageous position. So when you look at our ability to acquire assets over the last 3 or 5 years, long-term fee-based assets, we've outperformed relative to people we'd be benchmarked against.
David, talk to us about how hard it is to make a strategic decision for the bank that will work over 10 years, not just for now. So 10 years ago, the right decision, some people might say, would be to beef up wealth management and scale back fixed income trading. 10 years later, that might be the right strategic place to be in. But as we sit here now, 10 years out, how hard is it to get that strategy right? To look forward and say, what works now might not work in the future?
Well, look, I think that's what CEOs always have to do. And I think the right CEOs make investments to ensure that the competitive position of their franchises strengthens over time. And when you get it right, your franchise is strengthened. And if you don't get it right, over time, the evidence comes forward. So we are going to grow our asset management business. We are going to grow and expand our wealth management business. And we think over the next decade, those are opportunities that take core competencies at Goldman Sachs, and we can expand on them.
David, I want to talk about the sensitivities of the moment. And this comes out, I think, of William Cohan's book on Goldman Sachs. And there's that acclaimed scene at Scotty's over egg salad sandwich. And it's Mr. Weinberg and others that go down to Scotty's, and over lunch, they do Goldman Sachs business. This is a whole new world now. Tell us about the shift that you've had as a new chief executive officer, and this is Investor Day coming up. Tell us internally at Goldman Sachs, the mood as you go to your first Investors Day. What's the day-to-day mix at Goldman Sachs right now as you move forward with your strategic plan?
Well, along with the rest of our leadership team, I'm very privileged. We're very privileged to lead an organization that's filled with extraordinary people. And I think they're excited about the Investor Day. But I also think the organization is energized by the momentum the firm has to serve our clients holistically through a program we call One Goldman Sachs, to really make sure we're delivering as much as we can for our clients broadly. There's a real client service mindset in the organization that this leadership team is really pushing hard at making sure we get right. And when they look at the areas where we're investing, whether it's transaction banking, it's the alternatives business and asset management, it's the expansion of our wealth management opportunities, or it's our digital consumer banking platform, they're excited about the investments and excited about thinking about a Goldman Sachs where more of these businesses make us more impactful.
How new is that Goldman Sachs? It's not like Scotty's and the romance of egg salad sandwiches.
I
don't remember.
No, this is a really important scene.
I read the book, but I don't remember the scene.
But this is an important scene of how Goldman Sachs operated within the mythology and legend of the company.
Well,
What's the new Goldman Sachs look like?
I can't speak to how Goldman Sachs operated historically. Going back that far, because I wasn't there.
Well, go back 6 weeks.
Today, look, we have a very, very young, vibrant workforce that's very focused on serving our clients. We're very, very focused on making sure we continue to have the best, the brightest, the most talented, motivated, driven people to serve our clients well. I think we're in that position. This management team leads with an open, communicative style. I think that's what the organization wants, and I feel like the organization's excited about the direction we're moving in, but we have a lot of work to do, and we have a lot to accomplish, and like any organization, we're focused and committed to getting that done.
How do you open up to the consumer at the same time maintain that Goldman Sachs gold-plated branding? Are there no concerns about that?
Look, we think a lot about our brand and our position, but at the same point, I think there is lots that we can do for consumers that makes our brand and our approach, especially on a digital platform, aspirational for consumers. And look, when you talk about consumers, there is a wide swath of people that you can deal with, and I feel good about the way our brand's received.
Well, how do you make it aspirational? Let's talk about that.
One of the big endorsements, I think, of our brand is that when we partnered with Apple around the credit card, they wanted Goldman Sachs on that credit card, and I think that speaks to how our brand is viewed by some out in the marketplace, and we want to find ways to use that brand effectively to serve individuals for their financial needs. And there's no reason, if we do it well, it's differentiated, we ease their pain points, we give them information and resources that allow them to make better decisions, that can't represent that brand with consumers in a very effective way.
Are you going to take technology at this Investors Day and drive it forward? Is there another announcement with Apple or someone else?
There's no big reveal.
I got to make some news here, David. Help me here. They're in my ear. Make some news.
You're not going to make a lot of news.
It's not going to happen.
It's not going to happen.
You're not going to make a lot of news. We will talk about our technology investment. We have some new leaders, outside, and we'll talk a little bit about some of the technology investments we're making, like all financial services firms are making. We're excited about that. But I don't know that I'm going to help you make some great, grand, curtain-raising news. The Investor Day will come next Wednesday. And
look forward to
your feedback.
This interview is so over.
David Solomon, Goldman Sachs. Been great to catch up with you.